Good morning, everyone. I'm really sorry about the lack of audio. Sometimes I do have these technical issues, like, not having the mic plugged in. Yeah, that's Darwin Award for me today. That's my Darwin Award. All right, so let's take a look at SPY. SPY is range-bound, tremendously range-bound. We've got a big wave here that we pulled back almost to the 61.8 on the nose. Now we have this wave to look at, and this one is coming into the 50% level and can't seem to get itself over the top. The breach of it, going to be a good breakout to the upside. One fly in the ointment here is that the gap entry is here, and we've got a 200 sitting just about the middle of the gap along with all kinds of nasty congestion. So it's not going to be any good cakewalk, not any easy space to just ride through this region. That's not going to look good. Right now, the pre-market continues to bear down. Could be that we're just going to have a 50% level here. Now, that would be sort of a non-traditional formation if this is a Gartley, which would end up bringing us back into 78.6%. But that is a bullish Gartley, which means that we would have another big pop to the upside after that. Traditionally, we would want to come maybe all the way up here if we broke past this level here in order to make ourselves a pretty Gartley. But we could see this entire range event here. Now, what do we want to do? Pre-markets have us down. Let's see what the SPY is printing. Pre-market, give me 2 secs right here. At this time, it's printing below 140, 139.99, and so that's still above the 38.2, 31.99. Looks like it's at the base of this gap. Low. Nope, just under it. So it's inside this gap event. Perhaps it's attempting a fill. We don't know. Seems reasonable because the 50 is down here. And we gapped up, so there's going to be a little bit of a suction action here on the 4-hour 50. Not to mention we've got a little bit of price congestion right here. A lot of things suggesting a pullback into these regions, not particularly unreasonable. All right. In the end, here's the thing. We've just got to wait this out. If we trade momentum, yeah, there's none. Okay, if I can draw a line straight through every single candlestick within a trading range, I've got zero momentum, right? Because I'm not moving any farther over time. That being said, it's much better to wait for the breaks on the outside of these regions in order to establish anything. My stance remains firm. Until this is resolved, it's unwise to use any kind of swing formations unless those swing formations are based on theta or time erosion. Iron condors, credit spreads out of the money, those sorts of things. Absolutely useful around these types of events, particularly if you're using weekly options. However, if you are trading momentum, which is what most systems are based on, moving high to low or low to high, this is not going to be conducive to friendly days in the market. What's the bottom line? Be careful. Wait for the charts to confirm, and they will confirm by breaks or breaches of their relative range-bound regions. All right, good luck trading today.